Namaskara, Namaskar, Diyo Borodis Diyam, Sat Sri Akal, and Jai Shri Krishna. Wonderful. Namaskar Maharaj too. And चूंकि हम इजिप्ट की धरती पे हैं, सवा अल खैर and taba yamu ki. Ladies and gentlemen, have a pleasant day. This is Geetika Kanjudhar. Hello everybody. And I welcome you all to day 2 of the largest apex body convention of CREDAI here in Egypt this year, the CREDAI NatCon 2023, a futuristic convention at a historic destination. Let's warm ourselves up, please. Zor se, Zordar. This is because all of you finally came. Ladies and gentlemen, as we begin, I'd like to share with you how Shakti, the primordial cosmic energy, has traveled the world and has now made its way back to its source, our land. Indeed, truly, really, a new yug, a new era has begun. As India prepares to take on the mantle of Vishwaguru, armed with our Indic adage of Vasudhaiva Kutumbakam, one earth, one family, one future, led by the leader designated, our Honorable Prime Minister, Shri Narendra Modi, all of you, our real estate developers, you are going to create, craft, and build that new India. Already this force that you wield is a $500 billion industry. I read this. And what is predicted is that when we celebrate 100 years of India's independence, you will be a $5.8 trillion industry. So come, let's build together, let's change the world together, armed with the spirit extraordinaire that is CREDAI, and armed with the spirit extraordinaire that is India. यहाँ उपस्थित एक महारथी का, यहाँ उपस्थित एक महासेवक का और यहाँ उपस्थित हर हर महादेव का मैं हृदय से CREDAI NatCon की धरती पे डे 2 में एक बार फिर से स्वागत करती हूँ. Come on energy! Going straight into the title of the panel. The first session will put the spotlight on fractional ownership and tokenization in real estate. The moderator of this session, Dhaval, was earlier telling me how we will be able to trade our properties, manage our properties online like we trade stocks through our demat accounts. How legalities, processes, documentation, everything will be online. Wow, this is going to be such a bang, a boom for your industry. Let's invite on stage the panelists of this session. Shaan Zaveri, partner Terazo. Please join me on stage. Zordar taaliyan hamare panelists ke liye. Yes. Lots of appreciation and gratitude for your presence here this morning. Please join us. Shiv Parekh, founder and CEO, hBITS. Good morning. Are you please? And to moderate this first session of the day, please put your hands together as I welcome on stage Dhaval Ajmera, the director of Ajmera Realty and Infra India. This is over to you. Once I thank the esteemed panelists for their presence with mementos, token of our affection, may I please invite on stage Munjal Tucker from Team CREDAI.
Thank you.
And Dhaval, here you go. 3, 2, 1. Take the session forward. Your mics are all here?
Yes.
Yeah.
Good morning, everyone. I know it was a great evening last night. Thanks to Chairman, President, and President-elect for having us a wonderful party. But I think thoda kaam dhanda bhi aur kar lete hai. This is what we are here for, and also to enjoy. So let's start something which we all are really excited for. I was just thinking that, yesterday when we were listening to so many panelists over here, they were saying that India is really on a rise with so much of data being shown to us, that how India is going to grow over the next 10, 15 years. Shekhar Bhai also mentioned that next 7, 10 years is going to be really boom with all the statistics coming in terms of real estate. So I was just thinking that agar India ka itna growth hai and India is having such a great boom, so I'm sure the growth is not only in residential, but the growth is in all asset classes like commercial, residential, warehousing, retail. And residential is something which we actually sell, we construct, we sell, and we get our money as and how we progress. Commercial primarily, that is big projects or big spaces, are actually sold or leased out once it is ready. While there are giants like many companies which have been doing larger commercial projects, but if we have to really look at somebody who wants to put in money in doing a project and making larger spaces, so eventually if they have to sell that that piece of land, it becomes very, very challenging to find a customer of, let's say, 20 crores, 30 crores, or 100 crores of a unit size. And that is limited to either a fund or an HNI. But how can we really make this, something which is very, affordable, or probably in the catch of a common man who can be, every person can be an investor. So let's say I'm just giving as an example of, I probably own some percentage of shares in Reliance, so I'm a some percentage holder if you look at in the stock market, and I'm a some percentage shareholder of Reliance. So can I also do the same thing in real estate? अगर मेरे पास एक 100 करोड़ का office है, which is a space of office space which is worth 100 crores, can I own this by merely 10 lakh rupees or 20 lakh rupees? Can I become a percentage shareholder? So this was a new concept which was started, and I would, I'm very happy to introduce Mr. Shiv Parekh, who's from hBITS, who has revolutionized this concept, and he has actually taken up this ahead with getting investors with a token size of as small as 25 lakh rupees. And so giving, one of my own personal example, that post-COVID, when we made an office building, and the lot size, one office space was about 30 odd crores. And when we were honestly a little worried that where will we actually find investors or HNIs who are ready to take up this office space of 30 crores there, because it will be very limited. So that's when we met Shiv, and then he came up with this concept that, he is taking investors with a ticket size and investment of just 25 lakh rupees. And that is how he collected 25 lakh rupees from 100 plus investors.
120, yeah.
125 investors, taking that same lot of 30 crores and selling it to 125 different people. Because the reach became faster, the reach became nearer. So I would request Shiv, if you can please give some introduction and how does this concept really work, and it's been a phenomenal success, and Shiv today owns asset worth I think
250 crores.
250 crores. So it's a great concept for all of us as developers, that I can make larger offices. I can not worry about going to only HNIs or funds, but I can also go to people like Shiv who can actually take up that asset and sell further on to smaller lots and manage this. Shiv, can you please explain and give us how does this work?
Sure, no, great. Thanks for the kind intro, Dhaval bhai, and great to be on this panel. And I think it's been a great few sessions yesterday and today as well. So I think like Dhaval bhai you mentioned, basically I think for a developer, ultimately there are two kinds of customers. One is the end customer who's going to occupy the property, and predominantly, and you sell to that customer. That's primarily the case in residential. But another kind of customer is you sell your property as an investment. And right now, fractional ownership focuses on that segment of customers or investors. So I'll just, if you can just pull up the slides. I'll just, yeah, oh, perfect. So I think to talk about the customers, and I'd want to, discuss it in two different ways in this presentation. One about what do investors look for, and then how real estate forms a great investment. And then after that, how this model that Dhaval bhai just introduced is very attractive for developers. So firstly, in terms of, overall, to start with, what do investors look for in an investment? And we decided, we deliberated this internally, and we thought there are 5 major things that an investor will look for in any investment. One is safety and capital preservation. That's number 1. Someone shouldn't lose their money. Number 2 is return maximization. Just what is on 100 rupees, how much can you make in 3 years, 5 years, 7 years? Number 3 is transparency. How transparent is the investment? Do I know all the details of that investment before investing? And after investing, do I have complete clarity into what I'm putting my money into? Number 4 is hassle-free ownership. So once I make the investment, I want to be completely stress-free. I've done my work before investing. Now I don't want to think about it. I only want to think about it when I'm exiting. And then number 5 is your liquidity. Can I exit any time that I want? Or even if it's not the same day, do I know that if I want to exit today, I'll be able to exit within 15 days or 1 month. I have clarity that when I want to exit, I will be able to exit. So these are the 5 attributes of generally what makes a good investment. So traditionally, real estate has offered 2 of these 5 attributes, right? Capital preservation. Real estate has been, in fact, probably the most secure asset class if you compare to equity, if you can compare to any other asset class. The land value intrinsically is secure because people are moving towards cities. So you're always secure when you're investing in real estate in terms of capital preservation. Number 2, in terms of returns, real estate is a combination of 2 kinds of returns. There's rental yield, and then there's capital appreciation. So that also real estate has offered. Residential has been more focused on capital appreciation, while commercial, there's a combination of rental yield and capital appreciation. But the other 3 generally in real estate have been lacking. At the same time, though, real estate today, if you look at it in India, the amount invested in real estate that's not your primary residence is 80,000 crore. Mutual funds, for instance, on the other hand, is just 46,000 crore. So Indians love real estate, and they love investing in real estate, and primarily it's because of these 2 reasons that real estate has offered capital preservation, and it's offered rental yield, and it's offered basically security as well as returns. But the other 3 things have been lacking in real estate. Transparency. It's historically been a very opaque industry. If you want to acquire a property somewhere, you'll have to talk to the broker, understand, what other transactions have happened in the market. Generally, developers know more than the investor or the customer. So there's always been a lack of, this insecurity as to ultimately, am I paying the right price for that asset? So that transparency in real estate has been lacking historically. Other is obviously, real estate is not hassle-free traditionally, because if you own a property, you have to manage it. You have to pay property tax. If there's any issue with the tenant, you have to help the tenant fix it. Whether it's in residential and you have a tenant or in commercial and you have a tenant, it's not hassle-free. There is property management involved. There is a lot of, things that you need to do to manage the property. And finally, liquidity. Real estate, obviously, it's not always been as liquid as, say, the stock market. And that's just the nature of real estate, because assets are in a specific location. So the universe of buyers obviously is much smaller. Now what we are doing at hBITS, and I think a lot of other players, Shaan included, we are trying to solve these other 3 points that real estate has been lacking. We're trying to offer transparency, we're trying to offer hassle-free ownership, and we're trying to offer liquidity. And that's where fractional ownership comes in. You're offering the benefits of real estate, and then these 3 other things that were lacking in real estate, and solving them for investors. And I'll come to why this is important for a real estate developer, but just looking at from a customer or investor's perspective first is important. Right, so fractional ownership, and so far we've been focused on commercial. But when I say commercial, I mean offices, I mean warehouses, I mean data centers. Even in residential, it can include, student housing, co-living, senior living, basically any rental form of real estate. So again, it offers capital preservation. You're offering 8 to 9%, 8 to 10% rental yield. And along with appreciation, you can make 13 to 18% IRR. Here I'm talking about finished projects where OC is already received and tenants are already in place and you can buy that property. And then the other three aspects, right? The investment is completely transparent. You have all the details available on the dashboard, which is why, we have customers investing, say, in our assets in Mumbai. 30% of customers are NRIs, 30% come from South India. So they're sitting across the world looking at their laptop, their iPhone, and you're seeing the leave-in license agreement there, you're seeing your title report from tier 1 lawyers there. So it's completely transparent. The same, and even after investment, the same way you can track your stock portfolio on a Zerodha. I think Dhaval bhai mentioned that, owning a share in a Reliance stock, you can track everything about your Reliance stock. The same you can track about the asset on your dashboard. Ownership is also hassle-free because there are players like us that manage the ownership. And then on the platform, you can exit at any point in time that you want. So that's basically, from an investor perspective, what fractional ownership is offering. And just as a quick snippet, this is kind of, when you make an investment, you generally look at risk return. So fractional ownership over here in this slide, they've kept it as hBITS, but effectively fractional ownership offers very good, very superior risk-adjusted returns. It's a blend between equity and debt. Equity, sure, you can make 20, 25% IRR, but it can also go to zero. Debt, FDs, you'll make 6, 7%. Today it's a little bit higher, 7 odd %. But that's it. You're not going to make more than that. And this is the benefit of real estate. And that's why, you've had global players like Blackstone, Brookfield investing in real estate. You've had Ultra HNIs investing in real estate. But for a 25 lakh investor, there have not been that many options. You can buy a second apartment here, there, which is why already there's 80,000 crore invested. But how do we increase that even further? How can we say someone sitting in Ahmedabad, how do they invest in Bangalore? That's where fractional ownership comes in. And how is this relevant from a developer's perspective? Right? I think, like I said, there are a multitude of asset classes. So, if someone is developing offices, warehouses, data centers, schools, hospitals, student housing, co-living, any rental asset, this is an exit option for developers. I think a developer's business is to build the building, then either sell it to the end user or rent it to the end user. So if you rent it to the end user, then how do you exit? This is the exit option for developers. So it completely opens up the possibility of what can be constructed, and then you rent it out. I mean, if you look at, say, the US markets, even if you look at residential, you look at the US markets, 80% of, or 80+% of residential real estate is multi-family housing or rental housing. In India, that concept is still not established yet. But this, fractional ownership, new age concepts enables that. It enables a much stronger rental market. So if I just wanted to touch, say one segment, if you look at office spaces as of today, in India, in terms of grade A offices, there's 700 million square feet of grade A offices. That's approximately 7 lakh crore. So even for these grade A developers, what is the exit option, right? If you look at, say, the REIT market today, in the office space, there are only 3 listed REITs today. Total market cap of these 3 listed REITs and total assets in those 3 listed REITs is about 55,000 crore. Even if you say a few other developers, their talks, they're going to come up with REITs. Say you add 1,50,000 additional REITs will come up. That's about 2 lakh crore worth of assets. Or say 1,50,000 crore worth of assets. There's remaining 5,50,000 crore worth of grade A assets in this country that requires an exit at some point. The developer's done his job. The developer's built up the assets. He's rented it to grade A tenants. I mean, just the example that we did with Dhaval bhai, we did his asset. So who do you sell that asset to? That 5,50,000 crore asset. So that's where fractional ownership comes in. That's an exit where you're selling it to, a multitude of retail investors of a ticket size of 25 lakh. And so that's what I was talking about, right? There are generally 4 different exit options for developers. One is REITs. Only 3 REITs as of today. And, generally to list a REIT, you require assets worth 10,000, 15,000, 20,000 crore, which is limited to maybe a handful of 10 developers in the country. Otherwise, there are funds. Even from a funds perspective, there are either global funds who acquire assets of 1,000, 2,000 crore. There are a handful of 2 or 3 Indian funds that will acquire assets of 500 crore plus. Then you can sell to ultra HNIs. Ultra HNIs, will buy assets 20, 30, 100, 150 crore. But like that in the country, in India, there are probably 100, 200 ultra HNI investors who have that capacity to invest and have that mindset and willingness to invest, because it's even an investment, it's a full-time role. It's not just you park your money and you forget about it. So again, from a developer perspective, that's where fractional ownership offers a great exit option to developers, because fractional ownership platforms can invest as low as 20 crore. So you don't have to sell your full asset. You can just sell floor by floor. You can decide when to exit. You don't have to sell your full asset today. You can sell part by part as and when, as a developer, you require that liquidity. So obviously, ultra HNI is another option if you want to exit just 20, 50, 100 crore. But then, you're not dealing with a professional institute, an institutional player that's much more systematic, much more structured. So that's where fractional ownership comes in. So that's why it's a great exit option for developers. And finally, just to touch upon the regulation, I think we are very excited that SEBI is looking to recognize this concept. They came up with a consultation paper in May. They've called it MSM REIT. I think that's a great terminology, medium, small, micro REITs, small REIT basically, asset specific. And what SEBI's done, just to very briefly touch upon, I think, at least as per their consultation paper, it'll be interesting to see how the regulation shapes up. But they're making it much more accessible. So our minimum ticket size is 25 lakh, but SEBI is making it even more accessible. In the consultation paper, they proposed 10 lakh as a minimum ticket size. It's going to be liquid. It's going to be listed. So liquidity, further increases. So structurally what SEBI is doing will just enhance the liquidity of this asset. So you can, again, liquidity is very important as investment, and it's very important to see what an investor wants, because as the market builds, then the options for developers to what they can build increases. There's credibility. So the players that can run a fractional ownership platform or an MSM REIT, they have net worth requirement, they have requirement of experience of the platform. So you'll only have legitimate players. And then there's several disclosure norms, required by SEBI. So there's complete transparency. So this is just a brief summary of, fractional ownership, and I'm sure we can, have a great discussion going forward.
Thank you so much, Shiv. I think, what I really get this as an advantage, at least to the developers, is that, the biggest thing is that if I'm owning an asset or if I've built up an asset, I can sell part of it and I don't need to really sell the complete thing, because typically in a REIT, what I see is that you need to either sell or you need to list the entire building. They cannot do it as part. And the advantage with fractional ownership is that I can probably sell part of it and retain part of it or sell to somebody else. So it leaves as a very wider and a bigger option.
Yeah, I think, it's from in one line, is basically providing very flexible capital to the developer. It's equity capital, it's not debt capital. So you don't have a, hanging sword as a developer that, okay, I have to make interest payments to the bank, etc. So that, from that sense, you're secure. And yeah, see, if you look at any commercial development, generally it'll take 1 year, 2 years to lease out the full building. But here you lease out one floor, why should you not get an exit and, service the debt you used to construct the building? So you can, floor by floor, as you lease, you can exit your asset. Then as a developer, you can also buy back once you have that liquidity from the fractional platform in case you want to buy back the asset. And generally what we've seen with developers that we work with, developers, obviously they have their capital requirements, but otherwise they would like to continue holding and having a share in the asset that they've constructed. So in a way, while we exit and we buy assets from developers, the developers continuing, they own other parts of the asset. And we understand that, given that, personally I come from a development background, my father's a developer, we know what goes into it, that psych as to what a developer wants. And we want to work with developers, we want to be their partners and provide them as flexible capital as possible.
So this option is only, Shiv, in fractional ownership, is it like only for a ready asset, or let's say even if like today when I'm doing a residential building, I sell the building as in how I develop. Is there an option like this in fractional ownership where you come in towards the construction stage where let's say my plans are passed, I have started construction, and then I actually, probably just sell it as how I sell a residential building, probably a floor to you or something like that. Is there a, like to this fractional ownership, does that an option there, or they primarily prefer to have ready assets?
No, so theoretically, obviously it's possible. I think that's what Shaan is doing. Our focus personally is, as of now, from the fractional perspective, to focus on ready assets. But there's nothing stopping players and platforms to look at under construction as well. Only difference, obviously, is that at least our investor base so far that we have, they look at that rental income, that monthly rental income.
All right.
While under construction, obviously the return will be much higher, but you're not getting monthly income, and the risk obviously is higher because it's under construction.
Thank you so much, Shiv.
Thanks,
Ladies and gentlemen, I'm going to take you to the, the next, the big thing and a revolution which I genuinely feel is going to be a big advantage to us as developers and also to the market. Now that we have RERA in place, now that we have every aspects to look after to ensure that we have our projects being closed and developed as how we move forward. But there is always one thing which we all face is that I have liked a property, but if I can invest, let's say it's 100 rupees as a property, if I have to invest, I can probably invest 20 rupees. For the balance 80 rupees, I have to either go to a bank, I have to go to a fund, or I have to go to an AIF to probably take that money out. But can this concept of pool of investors, like typically which we have seen, that we have friends and families who come along with us, who trust us, who bring along their capital together with us, they partner with us to see that we invest in a property to buy, to develop, and to then sell. Can I actually do in the same concept of having a pool of hundreds of investors coming in over here and actually being part of this as a ownership to be a success, because higher risk is a higher return. When we invest in a property today, it's when we are, and actually when we make it ready, the value of it is significantly different than what we have actually started it, right? So when I buy a land, till the time I construct and sell and the asset is ready, the value is significantly different. But obviously that requires a lot of capital, that requires a lot of, and capital is not easy. There is a lot of risk, there is a lot of cost involved. But if I have some investors coming in together from the stage, from the time I actually buy a land or thinking of buying a land to actually moving it forward to, constructing it hassle-free without any issues with banks or funds or whatever, and, continuing the making of land or developing the land, I think we have Mr. Shaan Zaveri, who has, really revolutionized this concept of investing with us, holding our hands as developers from the time we actually think of buying a land till the time we actually build. So Shaan Zaveri and his team, the company is known as Terazo, which has, come up with this formula or this great word known as asset tokenization. And Shaan, if I'm not mistaken, the token when we call about is about as low as $1,000.
Yes, currently.
So $1,000 is 85 to 90,000 rupees. You can become a part owner of a land which is probably one of the prime most land which we as developers can't even think. But this gives us the opportunity to look at properties which we probably can look at buying or developing in a larger way without worrying about capital, because this concept which Shaan would now explain is going to really change a lot what we see in development. So Shaan, I'm really excited if you can please tell us, our entire friends and family, how we can really take this up forward.
Thank you. Thank you for the introduction. Thank you for having us, CREDAI. Really grateful to be here. Fantastic location. Shiv, can I have the clicker?
Oh, yes. Sure. Sorry.
So I'm going to get up, if it's okay, and just talk about asset tokenization. Like most of you here, I'm a real estate developer. So I've been in this business for more than 25 years. And I come with this solution because I faced a problem in my business, and we hope to solve a problem that some of you may face in your businesses. So that's my background. I live in Ahmedabad. I've done a few projects. The biggest challenge in real estate development is really raising capital, and fundraising has always been an issue, particularly for early stage projects where developers need, a large amount of capital to buy land, construct a building. Typically, there are, two funding models. There's debt and equity. The level of kind of equity changes depending on the model that you choose, but in one form or another, real estate development requires, a large amount of capital. And that's the problem we're trying to solve, is how do you get that capital? How do you keep that, retain that capital? How do you make capital easily available? And that capital available for investors who are looking at, different levels of risk. So, as Dhaval mentioned, it could happen from buying land to constructing a building to sale of a building. There are various stages where one needs capital. And so we're trying to see how we can solve the raising of the capital or exit of a building solution. What are the key challenges of raising capital? Everybody here has raised capital in some form or another. Dhaval mentioned friends and family. That's been our business model all throughout. We've only had a friends and family. And I see many of our friends here who've been very supportive of our endeavors. And one of the key challenges is you want to raise the largest amount of capital from the smallest group of investors. So you want big tickets. Typically, managing these pools of capital are complicated. It requires a lot of hand-holding, a lot of trust, and it becomes a challenge. And the third thing is that typically this is illiquid capital. When you invest in an under-construction project, the inherent nature of the asset is that there's likely not to be any liquidity. So we are trying to solve these three challenges with asset tokenization, and I think many of these challenges even Shiv is trying to solve. So it's nice how these concepts come together and try and find solutions for the real estate industry. But we were asking ourselves, is there a better way to raise capital than we've been traditionally doing? Can we reach out to more people than just our friends and family? For every investor we've had so far, we've had many who would have liked to invest with a smaller amount of capital, but we've not been able to accommodate them. So how do you really get investors to enter with small amounts? It's been really, and then how do you get global investors? So far our investors are based in Ahmedabad. It's really people whom we know. Could we reach out to more people within India, within the world? There's a lot of capital chasing good opportunities. So how do you get participation from global investors? And the most important, every investor who's practically invested with us has always posed this question. While they understand that this is long-term capital, they always want to know that should some need occur, is there an opportunity for people to exit? And do they have the flexibility to exit? So these are the kind of problems that every investor will also think about, and every developer will have to manage those expectations. So with this, we introduce asset tokenization. So what is asset tokenization? So asset tokenization involves representing fractional ownership of real-world assets, such as real estate. It could be venture capital. It could be other forms of holdings into digital tokens on the blockchain. I won't get into the technicalities of this because this is very similar to buying shares of a company. We all understand how shares work. This is just shares in a digital format. And instead of being listed on an exchange, these are on the blockchain, which is a distributed ledger, which makes the process of issuing and managing tokens extremely efficient and transparent. So how does it work? So you take an asset, or you wish to build an asset. Typically, that asset is held by an entity. You have a company, you have an LLP, you have a private limited company in India that typically owns an asset. Most developers will set up an SPV. And what we do is we fractionalize shares or partnership interest or units of a fund which own this entity, and we fractionalize them, and then we tokenize them. So this is the broad process. This is very similar, again, to issuing shares of a company. And that's how each person becomes a fractional owner of an asset, representing an undivided share. Typically, I've been asked this question a lot. Does one token represent specific square feet? No. Just like your shares in Reliance don't specifically represent your ownership of an asset. This also is your fractional ownership. It's like buying shares. And we believe that this could become a game changer for developers. How? Well, you can raise equity for your projects. You can have global investors. You can have them coming in with small tickets. You have automated management. So the managing your investor pool, providing all the information, all the disclosures becomes very easy. And all of this happens in a compliant manner. So Terazo is one of the few, if not the first company in India to be doing this in a regulated manner. We are regulated in Gift City under the regulatory sandbox. I must say that we've got tremendous support from the regulators there. It's a game-changing regulator, and we hope that with their help and support, this will really flourish as an industry. And if it's a game changer for investors, for developers, can it also be a game changer for investors? We think so. Why? Because, as Shiv said, who doesn't want to invest in real estate, right? It's a backbone of feeling secure. It's a sense of security for every Indian or every global investor to own some real estate. All we do is make it more investable. We make it easier to participate in. We make it fractional. We make entry easy. The process of getting in and out is fantastic. With this, you can really reach global opportunities. So while we start with our first project that we are tokenizing in Ahmedabad, in Gift City, we are looking at global opportunities. So we would like global investors to invest in Indian opportunities. And similarly, we would like Indian investors to be able to participate in global opportunities. So this is not limited to where the asset is. The asset can be anywhere. There are other rules and regulations, just like you own an asset overseas, there'll be rules and regulations. Similar rules and regulations will apply to this. Now, all this happens with enhanced liquidity because these tokens are tradable. They're tradable on our platform. And what that does is the minute you make something tradable, there's price discovery. Because the biggest problem with private equity or equity, project equity, as we all know it, is that it's very difficult to price your equity during the duration of the project. And typically, if you need to exit prematurely, you can almost expect a haircut. So this is how tokenization is a tool that helps you with price discovery, where there's a marketplace, there's a bid and ask, and you can decide at what price you feel comfortable getting into an asset, and a seller can be comfortable getting out of an asset. So what can be tokenized, right? Particularly in the real estate sector. It can be commercial projects, it can be residential projects, it can be industrial projects, warehousing. You can tokenize land. So you can allow participation of investors at the earliest stage, at the stage where you're buying land. So somebody who has that appetite, that risk appetite, that return expectation can come in at the earliest stage. But you can tokenize an asset at any stage. It all depends on what kind of return expectations you are sending, what kind of risk appetite do the investors have. So it's not limited by any stage. We can also tokenize PE and VC funds. another asset class which is typically highly illiquid and hard to get into because the opportunities are not available to most people. And amongst other things, art and collectibles. Fine art has been one of the best performing asset classes globally in the last 3 or 4 years. But most of us don't have access to that asset class. And first of all, most of us don't understand enough to be able to make an informed decision. So you want some of these assets, which are owned by high-quality asset managers who are curating the best assets and making them available to investors. When can you tokenize? If you take a real estate project particularly, you can tokenize it, as I said, at the time of buying land or start of project or during construction. You can have a ready asset or a leased asset. So there is no limitation on the duration at which you can participate. It all depends, again, on your business model as a developer, and it depends on what level of participation an investor feels like they want to enter. So typically, what we believe will happen is that higher risk, higher return investors will come in at the earlier stages, and the same investors will be replaced by lower risk, lower return expectation investors as the project goes through the life cycle. And therefore, the asset manager or the developer can continue to hold the asset, or they can transfer the asset. In our business model, we have seen many times that the strategy works best when we hold the asset for a certain duration and then pass it on to somebody else. So depending on your business model, you can decide to tokenize your asset at a time that you feel is right, and when you feel that you can maximize the returns towards the end of the project, or you can really raise capital at the earliest stage of the project. Now, is this possible? We hope so. So, first of all, this is not theory. This is reality. This is really, this is happening in India. This is happening now. We are tokenizing a project in Ahmedabad just as a proof of concept. The next question is, what about regulation? Because like any security, people want to feel secure with their investment. They want to feel confident that there is a recourse to a process of dispute resolution should there be an issue. I'm very pleased to say that, as I said, we are regulated by GIFT IFSC, which is India's newest regulator and a fantastic body. So that's how our project is enabled under the regulatory sandbox, but IFSCA will soon come up with regulation on how to tokenize assets, and we believe that asset tokenization will become a very important method of managing and raising capital globally. And can this work in India? Yes, absolutely, it is working in India. So this is our project. It's called Oryx. It's in Gift City. These are just some renders. And this is a joint venture with some of our friends here, with Zaveri. Thank you.
Thank you, Shaan. For a developer, I just want to understand that, let's say is that if I take a land or if I'm thinking of buying a land, I have two quick questions. Do you invest as the part of land that, let's say our land is 1 crore rupees, hypothetically, and I'm looking out for 80 lakh rupees as an investment from investors or whatever? Does companies which are doing in the asset tokenization be part of that journey by putting in those 80 lakhs first and then probably exiting it at the time of whenever they want towards being ready or under construction? And number two is that, let's say if I'm doing a project and the the price of that an asset which I like as a residential project, I plan to launch this at 10,000 rupees a square feet. And, I'm okay to give to somebody who is ready to pay me 100% advance at, let's say, 8,000 rupees today, when the project is going to be delivered after 2 or 3 years. Does companies like you come in and take that as an 8,000 rupee? And I have a follow-up question. So firstly, we'll work on this.
Yeah, so I think an asset can be tokenized at any stage. It depends on when is the optimal time for you as a developer to raise capital, right? So it will all depend on your business model. You can raise capital at the land stage, and if that's the kind of risk appetite that your investors and are looking for, and you have to create a good business model. Because when you sell tokens to somebody, you're going to have to show them the thesis of why this makes investment sense. So it all depends on the business model. If you have a good business model, people will give you money at any stage. So, but I think the nature of the investor changes based on, early stage investors are typically high risk, high return expectation investors. And then there will be other investors who would prefer not to take that risk. And they would say, look, I'm happy with a lower return, but I don't want to take on the execution risk, approval risk. There are so many factors that come into play. So it all depends on the investment thesis that you are able to convince investors to sell. But technically speaking, you can do it at any stage of the project.
So even as a typical investor of buying, ready or under construction assets, with a price discount and going through the journey.
Yeah, absolutely. So it just becomes a model. It becomes a funding model. It can be bridge finance. It can be equity capital. You can tokenize debt, for that matter. You can create any flavor that you like, that you believe your investors are going to appreciate. So it has to make sense.
And how about GST and stamp duty and all of that?
So as at the asset level, those don't change. What we are doing is the asset is owned by the entity. The entity is owned by, in our case, it's owned by a fund, and the units of the fund are tokenized. So when the property changes hands, if it does, there is no, at the investor level, it doesn't have any impact on you. Just like when Reliance sells one of its units to another company or does M&A, it will pay tax on that transaction, but as a shareholder, none of that comes to you. So it all depends on the nature of how the deal is structured, but it doesn't do away with the local taxation and other structures. You can create efficient structures to hold equity in these kind of projects and make sure that you create a business model which is the most tax efficient that you can find.
Perfect. Thank you. Last one question to both of you. What is the typical returns does your companies usually expect?
Yeah, so in terms of return profile, generally the rental yield is 8 to 10, 9 odd %. And then along with appreciation, an investor can make anywhere from 13 to 18% IRR. Just as an example, one of our assets that we exited at 17.5% IRR.
Wow.
Yeah, so again, it depends on the nature of the asset, but typically early stage investors will expect 15 to 25% IRR because they're taking a higher risk, participating at an earlier point in the project. Typically, land as an asset class delivers just fantastic returns, at least in the geography in which we operate. So that becomes an important part of the idea. But eventually, if we are making a leasing asset, for example, the Oryx asset, that will also generate a good yield. And then we would like to capitalize, get a good cap rate, and take an exit from that project. So it'll all depend on the nature, but it will range between, for equity kind of investment, it will range from 15 to 25%, and for more stable returns, it will range, again, like Shiv said, it will be more in the 10 to 12, 15%.
Thank you very much, both of you. I think it is a great revolution, and we should be, it is something where today as developers, we have different options available to actually look at our investments and taking our projects in a bigger way. I'm just going to throw open some questions to the audience if they have any, and then probably we'll just close the session. We can just take 2 questions because of it. So for the time being pressed. Yes, sir.
I have 2 questions. Are those smart contracts are enforceable under the Indian legislation? 1. And can throw some light on the marketplace. Is it a private marketplace or you have an exchange?
Yeah, so I'll take that. So smart contracts will certainly be enforceable. India will come up with regulation on how to regulate tokenized assets. At this point, I don't know if that exists, but because we are a regulated entity, we are answerable to the regulators, and while we are in the regulatory sandbox, the regulators will have liberty to make sure that investor interest is protected. So I think the very nature of the smart contract is that it executes a specific instruction without any emotion. So if something is going to happen, it will happen pretty much automatically. So the beauty of the smart contract is that it's different from a traditional contract where somebody can use their discretion to either enforce that contract or not. Sorry, what was the second question?
What is the marketplace? Is it a private or an exchange?
So today, no specific marketplace exists to trade these tokens. So we are building our marketplace, and that's our business model, is to create a marketplace for really curated tokenized securities. So we would like to create that venue, that destination where people can come to buy some of the most curated, high-quality assets that, if it's real estate, it's something that we understand and we will curate. We're also looking to invite other high-quality asset managers on our platform. And similarly, we're also looking to invite a large number of, PE firms who also seem to suffer from the same kind of issues that real estate does, which is illiquidity and long duration investments. So we are creating the marketplace where these tokens will be traded peer-to-peer initially, and then more like an exchange going forward.
There was some question from behind. Yeah.
Yeah, hi, this is Kishore here. My question to Mr. Zaveri is, when the tokenization is happening at the land stage, will the token buyers become promoters under the RERA? What will be their status when the land is subsequently developed?
Sure. So I'm going to give you my best guess answer at this point, which is that typically it's hard to tokenize shares currently. So the way we've structured it is that we have an AIF. We've created an AIF, and the units of the AIF are tokenized. So effectively, the token holder is a beneficiary of a fund and does not take any kind of legal responsibility for the operations of the fund. The fund managers, on the other hand, like any other fund that invests in an under construction project, may be subject to some promoter level responsibilities, but those can also be segregated reasonably well to protect the financial investors versus those who are in active management.
I'm sorry, I know there are many questions. We can take with them offline. They're just right here. We have interesting more sessions coming up over here, but thank you once again.